Hey everyone, and welcome. So you're just getting started with trading and you're looking for a strategy that, actually keeps your money safe? Well, you are in exactly the right place. Today, we're going to break down a really simple RSI strategy that you can use for day trading or even swing trading. Let's just jump right in.
Does this sound familiar? I bet it does. Look, it's a super common frustration, but here's the good news. It's usually just because of a simple misunderstanding of how the tool really works. And in this explainer, we are going to fix that for you.
So what is this huge mistake that so many people make? It's jumping the gun. It's acting on an overbought or oversold signal without waiting for any kind of confirmation. So many beginners, they see the RSI dip below 30 and they immediately hit the buy button, or they see it pop above 70 and they sell right away. That, my friends, is the trap. Acting without confirmation isn't a strategy, it's just gambling.
Okay, let's get into the tool at the heart of our strategy, the RSI, which stands for Relative Strength Index. We're going to use this to pinpoint some really great low-risk entry points.
So at its core, the RSI is what they call a momentum oscillator, which is just a fancy way of saying it measures how fast and how much prices are changing. But for us, its main job is to give us a heads up when a stock might be stretched a little too far in one direction, becoming either overbought or oversold.
Now, the two key numbers you really need to burn into your brain are 30 and 70. When that RSI line drops below 30, we consider the stock oversold, which could be a potential buying opportunity. And when it climbs up above 70, we see it as overbought, a potential chance to sell. These are the zones we're going to be watching like a hawk.
And listen, we're keeping things super simple and standard here. The RSI period, we're going to set that to 14. If you're trading during the day, just pull up a 15 or 30-minute chart. If you're more of a swing trader holding for a few days, you'll use the daily chart. That's it. No need to get all fancy and complicated.
All right, here's where the rubber meets the road. This is the first really actionable part of the strategy. We're not just looking for an oversold signal. We are patiently waiting for a very specific, confirmed, low-risk buy setup.
So it's all about this three-step process. First, we wait for the RSI to drop below 30. And then, and this is the part everyone messes up, we wait for it to cross back above 30. Second, we absolutely need confirmation. We're looking for a solid green candle, a bullish candle, which just means the price moved up. Third, our actual entry is when the price breaks just above the high of that green confirmation candle. You see, that little bit of patience is what turns a random guess into a real strategy.
Now, a setup is totally useless without risk management. For our buy trade, the stop loss, that's our safety net, goes just below the recent swing low, which is just the lowest point the price hit recently. This keeps our potential loss really small and defined. For our profit target, you can either get out when the RSI gets near the 50 or 60 level, or you can aim for a simple 1 to 2 risk reward. That just means you're aiming to make at least $2 for every $1 you're risking.
Okay, let's flip this around and look at the other side of the coin. The logic is exactly the same, it's just inverted for a low-risk sell or a short-selling setup.
And you can see how perfectly this mirrors the buy setup. First, we wait for the RSI to go above 70, and then we wait for it to cross back below it. Second, we're looking for that confirmation, but this time it's a solid red, bearish candle, showing the price move down. And finally, our sell order goes in just below the low of that confirmation candle. Same logic, just upside down.
And for risk management on the sell side, our stop loss goes just above the recent swing high, the highest peak the price made recently. Again, our risk is small and contained. The target? It's simple. We're aiming for a risk-to-reward ratio of at least 1 to 2. We have to make sure our potential wins are always bigger than our potential losses.
Okay, I need you to lean in for this next part. I'm serious. What we've covered is a great setup, but these rules, these are the things that will actually keep you in the game for the long haul. This is all about protecting your hard-earned capital.
These 5 rules right here, they are absolutely non-negotiable. Number 1, only trade with the trend. Don't fight the river. That means look for buys in an uptrend and sells in a downtrend. 2, add another layer of confirmation, like support and resistance levels. 3, stay away from choppy, sideways markets. This strategy just doesn't work well there. 4, do not trade around major news events. It's just too crazy and unpredictable. And 5, the golden rule of trading. Never, ever risk more than 1 to 2% of your entire trading account on any single trade.
Just let that sink in for a second. Yeah, profits are the goal, of course, but you can't make any money if you've lost your starting capital. Your first job as a trader isn't to get rich quick, it's to protect what you have so you can stay in the game.
So there you have it, a complete step-by-step RSI strategy that's not about frantically chasing every little price movement. No, it's about patiently waiting for those high-probability, low-risk setups that have confirmation baked right in.
So, what's your first step? It is not to go out and start risking your real money. Please, I'm begging you, open a paper trading or a demo account and just practice this. See if it clicks for you, get a feel for the setups, and build up some real confidence before you ever put a single dollar on the line.
I'm going to leave you with this one final thought. The strategy is here, the rules are crystal clear, but your success is ultimately going to come down to your discipline. So as you move forward, before every single trade, always ask yourself this question first: how will I protect my capital?